Hello and welcome to IBA's Market Update webinar. Thanks for joining us today. My name is Melissa Wybrow and I'm joined by Stuart Hatcher, Chief Operating Officer and Head of Intelligence at IBA. Stuart is going to be taking you through our overview of the aviation market, briefly covering the current trade environment, traffic and airline performance, before taking a closer look at OEM performance, retirements, lease end forecasts, trading activity and values. If you have any questions, you can drop us a line using the question pane on the control panel. It does make for an interesting discussion at the end, so please do drop us a line with anything you'd like us to explore further. So we do have quite a lot of content, as you can see, to cover today. So I'm going to pass over to Stu and get started.
Thanks very much, Mel. I'm going to run through the 20 slides that we have, not spending too long on the economics and moving into more specific asset-related parts of the market. Starting with the oil, as we always do, it's been a fairly bumpy Q4 with some real price variances exceeding up to 40%. Now, generally speaking, the industry can be quite resilient with the price of oil, but it's the fluctuations that are causing most of the problems. Now, we are finding ourselves into a rare territory once again, where we are finding cooperation between OPEC, US oil producers, and agreements have been so far been made to halt the increase in production and to start to see some reduction of OPEC production, which is actually started to play through earlier than what was expected. Now, of course, this does spat something of a little bit of cartel activity, so we are expecting there to be some stability, but it to be moving up towards the higher side. Now, our particular outflow for 2019 is that Brent pricing at $50 a barrel is pretty unsustainable for most of the exporting countries to balance their budgets. So even that, despite the low extraction costs, so we are expecting that pricing will settle around the $72 to $80, which is certainly doable within the industry. We have certainly seen higher than that before, but certainly the stability of the pricing is what the market is particularly calling for. Moving over towards the economic landscape, GDP the forecasts have been softened very slightly. We're expecting to see some slowdown expected for the US and Euro areas based upon prior predictions. US down from 2.9 to 2.5, with obviously the Euro area going through a little bit more turmoil too. The UK actually surprisingly had a slightly uplift according to the World Bank. Now, looking at the BRIC countries, we have seen certainly some softening generally across the board, although nothing to be particularly worried about in the short term. Certainly, trade tensions have been heightening this, and certainly financing conditions are tightening. So our prediction for 2019: slow in GDP growth, which will temper world trade, and slow passenger growth for 2019. But again, nothing to be immediately worried about on that. In terms of interest rates, very briefly, of course, a stronger economy will of course push up Fed rates a little bit further. Expectation for next year is 3.1 down from 3.4, and 2019 we're expected to see just 2 rate rises than the normal 3. Now, of course, while raising interest rates will indicate an improving economy and should improve some lease yields, the inevitable appreciation of the dollar will certainly hinder airline profitability for those outside of the US, and we're expecting to see some bankruptcies following suit. Now, moving over to foreign exchange briefly, it's been a pretty tough year in 2018 for Argentina, Turkey, Brazil, and Russia on the exchanges, and pretty much a lot of other people were affected as well. 10% variance is enough to cause a significant pain on fuel maintenance, reserve, and lease rates. And certainly when you consider maintenance is 14% and fuel is approaching about 45% of cost, that can have a really big significant factor on how an airline is performing. And certainly we have seen that for carriers in Europe, India, South America, and across Southeast Asia, all showing signs of stress in that face of that currency headwind. Now, we do expect these issues to remain for 2019 while that US dollar still remains so strong, and we are expecting airline costs to rise and to failures to increase. Now, of course, unless oil can buck that trend and fall by greater than 10%, but we're not particularly looking at that, especially if we see greater cooperation with the oil producing countries. Now, whipping over to traffic, for the first month I've seen, we're starting to see some softer forecasts from IATA. Certainly the upward traffic trends indicating that the economy expansion is slowing, and we're starting to see some figures move further to the left. We've seen load factors dropping down at 80% from 80.5. Again, not something which is stellar, but something certainly to watch out for. North America continues to bolster that demand, but we're certainly seeing some issues within Asia and Middle East, which has been dragging the overall performance down. Domestic traffic has been down overall, although when you factor in the strong performance of the US, Russia and Brazil, that's been particularly encouraging. India has moved down from where it was at around 20-odd%, has now been moving down into sort of the mid-teens. And similar for China, we've seen some quite big slowdown on traffic movements there too, which again is something we have to look very carefully on, although the US market is certainly holding things up. So rates overall still pretty good, but the trend is slipping. We're expecting to see a little bit more slowdown in India and China while the US continues to power on. Now, moving over to specifically performance, airline profits are being squeezed, yields continually drop, and it's clearly evident that that is causing more problems. Premium cabin revenue has been showing some improvements and resilience there based on just the general strong economic conditions. And certainly the strong dollar, we keep coming back to that point, is severely impacting operating cost, coupled, of course, with some strange and severe weather conditions we saw in 2018 and some rather turbulent oil pricing that ventured through from October onwards. Generally, upward passenger trend has been slowing too. So yields remain too low for sustainable profitability outside of the US market, while the US dollar remains so strong. 2019 is expected to offer some stability on oil price fluctuation, which is paramount. Certainly, if anyone knows what's going to happen, then they can set fares and price accordingly. But certainly managing capacity and fare is going to be something which is particularly important. Moving over to the actual failures, we keep talking about this. 27 operators we've recorded ceased operations in 2018, which is up from 15 that happened in 2017, and it's generally been picking up. Obviously, when you look at it that's just purely from airlines' perspective, the numbers of aircraft involved have actually dropped to just below 100, and that's primarily because there were no Monarchs, no Air Berlins, and no Nikkei failures to push those sort of numbers up. Several have been close to collapse at the end of the year, and certainly Q3 profits were not sustainable for some of them to push too hard. And we're still surprised to see some of them still operating, but they are attempting to find a way through that, either through capacity management or a potential sales going through. Lease defaults are up quite significantly for rental and reserve payments. And what we're obviously seeing, we've seen this before in 2008 to 2010, lessors holding back from repossession. So it may not be yet manifesting itself in terms of what the market's actually seeing. But certainly most lessors are finding delays of payments coming through, and 6 months are not unusual. So the outlook is still pretty challenging for operators that surround the Indian Ocean and Southeast Asia. I mean, particularly everything from South Africa right through to the other side to Thailand and Malaysia, Indonesia. We are seeing challenges there. And on the other side, also places like Philippines too. Elsewhere, Argentina and Mexico have clearly been showing some pretty red figures for their Q3s. Now, the Q4 results will be coming out, I believe, next week and the week after, and we'll have a little bit of a better idea on how they ended up their final years. Now, it's also some issues have also been happening in Europe as well. We saw some fantastic growth in Europe overall last year from some of the big carriers and bigger LCCs, but certainly unable to compete for the smaller ones who are struggling. And that's where we expect to see some of the pain for some of those Western European carriers. Moving over towards OEM performance, and initially we'll look at Airbus and Boeing. Pretty much the prediction for orders played out. We saw an increase of demand for 737 MAXs, which we we indicated last year, and quite a big margin as well. We saw a lot of MAX orders going in, and naturally that will play through. But Airbus still, of course, still have quite a large backlog further ahead of Boeing's positions. Once again, wide body is still not really attracting much attention, except for a pretty strong demand from freight orders for Boeing aircraft. Now, what that obviously means is backlogs will continue to plateau. And if it wasn't for the A220 addition to the Airbus backlog, we would have started to see a decline there as deliveries start to exceed net orders for that year. Now, the other main thing, of course, is production for Neo Maxes got pretty much back on track towards the back end of the year. Looking also at cancellations were following trend, nothing really out there outstanding, but 183 across Airbus and Boeing. There were a lot more in relative terms for the regional carriers. But also, in addition to that, there were another 300 odd model changes as well as operators switch between the various Neo and Max orders that they originally placed. Looking specifically at Airbus's deliveries, they had a bit of a slow start to the year, mostly down to engine availability. The airframes were built, but nothing hanging under the wing. And Airbus managed to turn that around. So we had a delivered rate of around 52.2 for 2018, which was up considerably from last year and pretty much on trend for where they want to achieve for the middle of this year. They still have about 168 COs to deliver, and split actually between 94 CFM, and that should be 15 IAE aircraft as well, with a few more unknowns. And Airbus still backloading the year with deliveries. I mean, that's obviously still very key, but that's to be expected given the issues with the engine deliveries that we saw last year. Now, the deliveries for Neos doubled 50% of the annual delivery allocation, which is the first time that we've seen the Neo actually exceed the CO. And when you look at that, only 4 GTS powered A320s delivered between January and April. They pretty much put a stop to that versus 43 LEAP aircraft, but that completely came back by the end of the year. So whilst the beginning of last year it looked incredibly unlikely that they would reach their 60 by mid-2019, if they actually continue that trend, that's where we will end up by somewhere in the middle of the year, which will push to those deliveries of the narrow bodies up to around 700, which is where they wanted to be a couple of years back. Now, of course, new engine technology still faces reliability challenges, so that could stifle production if something pops out of the problems again we'll be seeing in performance. So moving over towards the Boeing deliveries, Boeing overall did manage to pip Airbus in their overall, but when you look specifically at the 73s, they're around 48.3, which again is up from about 44. Similar sort of to the A320, just around about 160 NG still to deliver, and most of those passenger, but they do have quite a number of military aircraft which won't necessarily follow the same delivery rules across the board, and we may see those stretch out a little bit further. Now, generally the deliveries for Boeing have been more ordered through the year. We tend to find quarterly peaks, and there's a lot of simplicity there, of course, as well. We only have one engine type to consider, and overall the 73 MAX up to about 32% of the overall delivery stream with the narrow bodies. Now, Boeing expects to hit production of 57 by mid-2019, and that looks very, very possible. Moving over to wide-body performance, we've seen quite a few woes and a few things. When you look in the market and you look at the data, there's a lot of parking and stored aircraft out there. Now, some of those, of course, are associated with some technical issues, such as the Trent 787, still around 20 of those parked. We have a ton of the end-of-the-line 74s, which are sitting parked at the moment, 71 of those, but that's to be expected. We have a large number of 300ERs, 767-300ERs parked, and a lot of those will be going for freight. And we're seeing a lot of news at the moment about expansion for the 767 freight conversions as well. Now, the 777s, and both the 777 Classics, which we call them here, the 200, 200 yards and 300s. It's around 77 of those parked, and we're really not seeing too much demand for those. Lease rates have been coming down for the last couple of years for those aircraft, and the reconfiguration for those are one hill that's difficult to climb. On the 200 LRs and 300 yards, we've got about 14 of those parked, lease returns, some of them for long-term maintenance, and some airlines, of course, having a few problems and can't get parts or can't afford parts. We've seen the Etihad 200 LRs now park up. We're not really expecting those to jump into service anytime soon, or if at all. The 300 yards, of course, are the one we are more concerned about and looking very carefully at those. Looking at the A330ceos, 46 park, that's pretty much been the standard norm for the last few years. And we see demand for those. Some are going for scrap, some are going for freight, and some of them can't get engines, and some of them, around about 20 or so, are probably not going to be fit for purpose, and we may see those ones scrap in the next year. Looking forward to the A340s, around 67 park, we actually saw this parking number drop because of the 787 issues, and we saw a few of those coming back into service, but that really is just a temporary measure. And then moving over to the 380s, we've got a couple of those parts at lease end, and we've seen 2 of those going towards retirement. Now, widebodies have not really been producing anything from the order stream for the last couple of years. We saw a spike up around 2014, 2015, when we saw the oil price starting to fluctuate. But the configuration and what airlines are particularly wanting to do is still very much unknown. Older 330s proving useful, cheap enough to transition, and very much similar to the way the 76 has done. So I still see the 330 as being a constant flex aircraft. We see freight conversions of both those types going on, although 76 probably more likely than the 330s in numbers. The 300ER, 777-300ER remains the mainstay of the fleet. But we don't really see any new demand for the 8s and 9s. It remains pretty poor, and certainly while the oil has been low for the last couple of years, operators have been quite happy to maintain the older variants, providing they're still in a good condition. Now, the market is avoiding reconfiguration at that lease end, and that lease end part is where the focus is going to be. So we're going to expect to see a bunch of extensions happening over the next couple of years. They may be short term, but we still have a bow wave of Emirates aircraft that will undoubtedly start to make their way back to their owners. 78s and 350s still remain top of the list, and potentially is where we're seeing the shift of the heart of the market away from the triples. So we're seeing certainly more interest on the 78s, the larger 78s, certainly, and the middle 350s. Touching on the regional carriers, the regional OEMs, excuse me, it's been a bit of a bumpy ride for Embraer this year. Certainly, we've seen the fact that they were pretty much near to the point of an excess of cancellations versus actual net orders, and it was only really at the end of the year we started to see a positive spike for Embraer. ATR was pretty stagnant across the board. And Bombardier as well wasn't really running away with anything particularly stellar there. It's been an interesting year from Bombardier. They have moved on the A220, so all the figures for the A220 now being pushed through onto the Airbus side, and then pushing through to the sale of the Q400 program too. So really not that much, of course, to actually shout about for them for this year. Embraer's had those significant cancellations, 181 across the E2 programs and a few of the E190s as well, from 3 carriers that we know about: Air Costa, JetBlue, and SkyWest. And SkyWest was a 100 aircraft order, and certainly what we might expect to see is that shifting over towards a scope compliant aircraft as opposed to sticking with the aircraft that they originally ordered, which would not have got through. So pretty much what we're expecting to see is the tactics shifting towards compliance for scope. When we're looking at the overall backlogs, they don't look as bad as what the orders looked. ATR pretty static, and that keeps them going for a couple of years of production. Likewise, Embraer is a slight dip down there, but again, a couple of years production still, maybe even as many as 3 years production remaining. And we could start to see some slowdown in some of the deliveries as well. Pretty much across the board for Bombardier and Embraer, we saw a reduction in deliveries compared to last year. They remained in the red pretty much for the whole year as they're stretching those programs out a little bit further. Certainly, of course, weight, seats, and size are going to have to be addressed for the regionals, and the ATR market still remains to be a little bit challenging, with around 12% of those later generation aircraft still remaining parked. Moving over towards retirements, we actually saw quite a big jump up in retirements in 2018, attributed to the narrow bodies. Retirement age is actually still increasing for the most part for narrow body and wide body, and that's really because they've been eking every hour and cycle out of those aircraft over the last couple of years. Naturally, a few freighters in there will be raising some of these, but very few of those freighters are actually retiring. Regional jets even increased a little bit to perform just sub sort of 20 years, and there has been an upward trend despite an increase in retirement events in the last year. Turboprops the opposite. Maybe we saw only a smaller subset, of course, of actually going in there, but that does have an effect on the overall metrics. Now, overall, of course, if the aircraft, with the oil being down for the last couple of years, demand for the aircraft parts will increase. Demand there is expected still to continue, and to fuel that demand, particularly sourcing for engines, and engine values have been very, very high still. Even the 73 Classics, pretty much any aircraft that can be converted is still going down that path, and the rest are going to be coming to the end of their life soon, and they are getting pretty old. Operators do continue to find more cost-effective solutions to maintain that fleet and hold off from taking operational risk and high ownership costs by buying in new technology. Now, of course, with oil, if it stabilizes at a high level, then we would expect the retirement trend to increase as more new aircraft come on board. Moving on to lease end trends, it still follows a similar trend we've seen in the last couple of years. There is this big bow wave that's continuing to shift to the right. Whilst 2018 did see a slight uplift in lease ends, it wasn't anything to really dent it in any such way. And certainly we're seeing some aircraft are being deferred further and further to the right. Of course, the problem there is, and there's several ways you can look at this and think of which way it's going to go. If it continues, then clearly there's going to be a problem for MRO capacity in space and parts to handle the increased level returns. And it could play into both hands, really. On the one hand, we could start to see lessors getting a better cash out position as the asset comes back in a worse condition and lease end negotiations happen around the return conditions, or we start to see a little bit more extension activity going on as airlines are unable to pay for those positions or get slots. Of course, the stronger US dollar does make that a little bit further problematic too, as all that maintenance does cost US dollars, and certainly for the narrow body market, a large proportion of those do not take in US currency. Reserve-based leases, of course, should be fine, provided they're actually reserved at the right levels. But of course, the return condition itself and the return checks could be facing some severe delays, and late redelivery penalties could become more commonplace. Retirement rate could also rise significantly unless lessors cash out a mid-aged aircraft. That may not happen in 2019 or 20, but certainly once we see the end of the current cycle, we could start to see a rise in those retirements. Now, 2019 itself may just be another year of extensions, although all years have some level of extensions to consider. You know, we're expecting around 700 lease ends to occur in 2019. Looking at the wide body, doesn't look quite so dramatic. We don't see the same trend exhibiting into the same problem as the narrow bodies. There is a lease end peak, and it is coming this year. And you know, one thing is it tends to be a little more predictable in terms of when those lease ends are, so we can be fairly firm in when we believe they're going to be. There can be 1 or 2 year extensions pushed in, and certainly we do see those occasionally for 777s with a 1 or 2 year extension point, but that may not become the absolute norm. And so, I mean, certainly 2018 proved to be weak if returns as operators extended leases further on 330s too. And certainly I would say that the Rolls-Royce issue on the engines, Rolls-Royce engine issue on the 78s certainly made operators sit up and think and hold aircraft on for a little bit longer. To harp on the same point, reconfiguration cost is another key factor the lessors would prefer to kick down the road too. Certainly, we can see that operators can negotiate favourable terms too for the wide bodies. There isn't often another operator waiting in the wings ready to take the aircraft, and so therefore we may start to see some quite favourable terms. We have seen those already, releasing rates at much lower levels. Some also giving away some aspects of the return condition as well, and that certainly helps the airlines continue going forward. 777-300ER remains on watch at the moment from a position of lease rental performance and that cost of configuration. We have seen a number of sales of 300ERs in 2018, and many of them have been very strong pricing. But certainly the negotiation of rentals or new leases that have been signed have been at much lower rates, and certainly rates of around $500,000 a month are not unusual for some of the aircraft that we have seen, while some extensions that have been part of a longer play are still a little bit higher, around 700, and that's for a 12-year-old asset. So for the wide bodies market, we'll expect to see around 200 lease ends and around about 80 extensions. Trading activity for 2018, it's been down around about 10% below expected trend, of which was expected to be around about 3,000 overall, and we ended up around just under 2,700. When we start to look at just the activity for sales associated with leasebacks, sold off lease ABSs and sold with leases, then that number's around 12% below where trend is expected to see. 2018, we saw fewer direct large lessor acquisitions. They were played out mostly at the end of 2017, although a few of them are still in the wings at the moment. ABS transactions continue to increase for both narrow body and wide body, although it is now seeing a little bit more challenging environment today. Approximately 8% of the world fleet continues to trade on an annualized basis, although we may see some reduction occur if the market loses some confidence. So despite many large lessors avoiding the sale leasebacks, trading volume remains pretty buoyant, although it has generally featured smaller lessors, and certainly some prior analysis we've presented before, which indicates the top 50 lessors are very much down on their sale leaseback activity. Now, if a market correction of price does happen for 2019, then we might see that it doesn't really tend to deter the normal lessor activity, providing that traffic remains, demand remains, and certainly lessor trading is expected to continue. We are expecting some of the maybe new entrants cashing out, and we've already started to see some rumours around a few lessors that may be available for sale coming up soon, that have only been in space relatively short time, because I mean pricing is generally pretty strong. Now, looking just specifically at the four areas, and look at the top assets, pretty much across the board, as you'd expect to see, the 800s and the 320s are still very high above that, and the classics are still being pretty strong in terms of the sales off lease too. Sale leaseback market was dominated by the last of the line 800s, all pretty much at brand new levels. And in second place there were the Neos, followed by the Maxes. And certainly lessors tend to be opting for a greater dominance of the Neo than the Max in the current play. We also saw quite a large number of 320 classics in the sale leaseback market, but these were certainly a lot older, around the sort of 12 to 14 year range, which kind of bucked the trend that we saw for the NGs. We even also saw a few wide bodies going in, but they didn't quite peak up into the large numbers as we wouldn't expect them to. They are still below that sort of top 10. When you're looking at the sales with leases attached, the age profile goes up a little higher, and the 320s, COs and the 800s clearly dominate that once again. But we've also got a large number of E145s in there as well, quite surprisingly, which managed to beat the 321s in there too, before you start getting into the lower remnants of the classics and smaller variants that we expect to see trading in smaller numbers. Age group, generally speaking, of the more liquid aircraft, around 10-year-olds, which is sort of coming either at the beginning of their second lease trading on to new investors, whilst when you look at some of the other aircraft, some real quite variances in ages. When you're looking at the sales off lease, naturally we expect that to be a higher age profile. The classics dominated there with nearly about 130 trades of those. E145s in there too, was in second place too. But in this sort of area, you are expecting to see an average of 15, 16 and above age groups in there. And generally speaking, a lot of the buyers in this area are either startups or freight converters in there too, so they're buying up feedstock. Finally, when you look at the sales on the ABS market, no surprises there. The 800s and 320s were taking the top there. We also saw a freighter ABS as well now, which is why the classics got pushed in there to third spot. But unsurprisingly, you see 319, 700s, a bunch of 330s, and some other the larger NGs and 320 families poking in there too, and that's pretty standard on the sort of level that we tend to see. When you look at that spread, that last chart, that's around about 96% of the ABS market. So it's, whereas the others are really only covering about 70% of the trades in their top 10s. Now, of course, if cash becomes a problem, airlines will opt for more sale-leasebacks, and we are expecting that even though sale-leasebacks have been dying down over the last couple of years, if airlines are faced with an uphill slug, then we expect to see a few more sale-leasebacks coming in. But also, there's also the spate of lessor speculative orders as well, so that could come into a clash for that. If sales continue to flourish, providing that we have got still some financial liquidity in the market, a correction in pricing will stimulate demand to buy and stifling those willing to sell. A correction, however, will stifle that ABS market there. Now, looking just at the leasing activity, so what we've also done here is combine the sale leasebacks too in there, and that's the grey section on the bottom of these four charts. Now, the major aspect, of course, is that the number of lease starts are considerably higher than the number of lease ends, and of course, this is all fueling that bow wave too, and the number of for people, willing participants to jump into this market still continues. Now, on the narrow body, that's most accentuated, and you see that narrowing down when you look at the wide body turboprops and the regional jets too. Now, in terms of the number of leases, new leases started in 2018, there was around about 1,800, which again was another peak year, and we've seen that gradual increase there, and that's despite low yields. Now, leasing activity does remain as strong as ever. We are still seeing that the split, while the split does widen, there is fuel for concern for down the road, but not necessarily in today's market precisely. So for 2019, we expect to see a rise in lease ends. For 2019, we've already said about 700, although that's still massively low compared to bring those numbers back into kilter and to look at numbers that we saw prior to sort of to 2013. Now, also mentioned as well, of course, you know, if airlines are short of cash, then we expect to see some sale leasebacks increase. So we'll see that grey metric growing a little bit, and the lessor direct purchases will also need to perform, so they'll be under pressure to get decent returns on some of those. Now, wide body lease starts will continue in decline if liquidity becomes a little bit more challenging. Now, looking at the lease rate performance specifically, we have seen some actual improvement. You know, it's something that's been hard to see for the last couple of years, but we did see a little bit of improvement on the 800s and the COs. And you know, a dual effect of higher interest rates and higher market values have fueled some of that aspect. Rises are welcomed, but the lease rate factors are still woefully short. We're seeing those decline at a faster rate on the new generation, the latest generation of aircraft, compared to some of the NGs and the COs too. We have seen some pricing firmed on those Neos and Maxes, but when you're looking at just the lease rate factor themselves, it has been still in decline. Wide body performance has not been good for older variants, and certainly we've seen airline aircraft like the 777 a few years ago and the 330s in more recent years continuing to be heavily pressured downwards, and we expect that to be pushing towards the 777-300 ER. So moving specifically on to the value performances on certain types. Now, all the narrow bodies that we showed here are all in the green, so we've seen mostly on the older variants. So the 319s, we saw quite a substantial increase on the oldest variants in there too, as well as the A320 on the early and mid builds. Obviously, on the latest builds, the last of the line aircraft, we have seen a slight compression on that. We've seen both 321s having some significant increases on some of the early builds. On the NG side, once again, we have seen increases. So pretty much across the board, the appetite to buy has been very high, even considering that the yields on the leases have been in decline. When I look briefly at the regional jets and turboprops, we've seen some improvement on for the 175s, 145s has been increasing demand, but that's contracted pricing. So it's not unusual to see 145s going for about 1.5 and even lower if they're sold as part of a job lot. On the turboprop side, ATR values remaining very, very soft. We've still got 12% of the latest generation still parked, and we have not really seen much return to form for those aircraft. And likewise on the Q400, we have seen some further value softness, and we may expect to see that a little bit going ahead. Although if oil price does settle at a higher rate, that would be one signal for one areas to come back. Before I come back to the alternatives, if you look at the twins, most of the twins are actually showing areas on the decrease on the reds. Certainly the 330s for the early builds. We have seen some increases on the middle builds, the sort of 8-year-olds. A340s, not really spending much time on those. They have been constantly decreasing. We've seen more activity on the 600s now, so we've been able to see a little bit better of where they're actually performing. On the latest generation, the 350-900s, as well as the 787s, we're seeing pretty much an increase on the new delivery pricing for those aircraft as well, and that we are constantly in conversation with customers about those. When you look at the big end of the market, the 380s, naturally that's been in the press quite a lot. We've seen constant downward pressure on those aircraft for those early builds, and I mean that 4% is only not what we've seen for the whole year. That's just the latest change that we have made. So we've seen constant decreases there. 747s have been pretty depressed for quite a number of years anyway. Now the 767s, we have seen a slight increase with demand on some of those, the good aircraft, and even some older aircraft. We've seen some big numbers pushing up, and 777s across the board. We have seen that they've been on watch, and the 300 remains on watch still. Now trades at 300 yards have been pretty high in 2018, and we've seen, especially going to some good credits as well, some really good strong pricing for those aircraft, but they have often had quite certain extension prospects attached to them as well, and they're one of those aircraft that actually can perform very, very well, or you can be stuck with a very large bill if you're not particularly careful. The only freighter I've already mentioned on there is the 777 freighter. We have seen the new builds on the pricing come down, but then on the older aircraft, we've seen those increase as those airline aircraft place. Very briefly touching on the engines and helicopters. On the engine side, we've seen for the narrow body certainly no short-term shop availability. Airlines using every available utilization they can, and pretty much it can be getting like blood from a stone sometimes on engines. So we've seen rates going up and up for those on the narrow bodies, but we do see caution on older wide body engine types that are certainly fitted to aircraft like the earlier 777s and A330s particularly. On the helicopters, just a brief point, still too much uncertainty in the market to be bullish about that market. Values for some types have been really quite horrible for 2018, but there's no shortage of investors searching to take advantage of deals. And certainly some of the oil reports I've seen from Oil Intel would suggest there's about a 6% increase in investment in rig work for 2019 coming up, which could spark some improvement on that. So then if we just look briefly at the overall outlook and just touch on a few points. Brent pricing, as we said before, $50 per barrel is pretty much unsustainable, so we expect to see that up to the 70 to 80. Slowing GDP growth, tempered world trade, and slow passenger growth for 2019. So certainly the higher fuel price, the cartel environment could possibly highlight a difference between new and outgoing tech. We've been talking about that for a number of years now, and we might actually start to see some variance in pricing between those two. Overall, the continuing strength of the dollar will kill the market if it continues to the way it was during the middle of last year. Airline costs are expected to rise and failures increase also, but oil could dial that down a little bit if we see that. Now, predictability is what it all comes down to. If costs go up, it can be pushed down to the fare, and it can completely take away the air from the bubble. And it's not something run to the hills. It's not run to the hills time, but it's certainly a situation to be wary of, that some airlines really can't cope with those higher costs. Airbus and Boeing will deliver what they've said they would. There is being talk about a production to start bring down that production and dialing it back, but with backlogs, combined backlogs around 15,000, why on earth would they? On the wide body demand, continues to be that challenge. There are bargains out there. There are good aircraft too. Certainly 350, 787s, new aircraft positions are still very hotly contested, and there's no shortage of participants in those deals. But certainly when you look at the older end of the market, there are people that could get burnt if things go wrong there. If oil rises and holds, and I expect to see some orders rise and for some of those newer types that have been portrayed in the market. And of course, as well, you've got the threat of the NMA in there too. Whether or not that happens or not this year or not is another matter, but certainly that could be another nail in the coffin there. Market does continue to be tough on the regional turboprops. Got into there a few times. Embraer and MRJ need to focus on those scope fleet replacements rather than trying to bring anything all new that won't fit within that US market, and get those GTF power variants out there. Likewise, that could help the fortunes of the ATR and Dash 8 as well in the longer term with the high fuel price. If that market correction is coming, then we expect trading volumes to come down in relative terms. The fleet does continue to grow around 2,000 aircraft per year, and only reduced by 600. So the market is still fueling up in there too. So just the 3 points: the narrow bodies, Neo Max will firm, good. CONGs will hold steady. Older variants could be downgraded. Airline failures catalyze downturn in value. On the wide body side, 350, 787s continue to firm. 300ERs close to lease end will extend at rates around 500. 330s remaining demand, but well below long-term trend. And A380 releasing expected to remain a challenge. On the regionals, young scope compliant aircraft will perform. Demand will shift depending on the oil volatility. Over back to Mel.
Okay. Well, that's the end of the formal part of today's presentation and market update. We are going to just take a quick look at the questions. While we pull them up, I'd like to mention that the data used in today's session is from IBA IQ, our online intelligence platform. If you haven't already taken a look at the various models that we have, fleets, values and trends, we are offering free trials. So please do get in touch if that's of interest to you. You can do that online at iba.aero, or if you are in Dublin next week, many of us will be there, and you can come and see us at Airline Economics or at AFJ, and we'll be able to help you out. Okay.
So I've got a few questions. Okay, so number one here, we've got, are the airline failure numbers presented on a 12-month rolling basis, or is the 2018 figures an annualized number? So the figures that have all been presented are based upon an annual roundup of those figures there. Just want to bring up the charts. Yeah, so yeah, they're all done on a rounded basis. The orange line is based on the number of failed airlines. The red is the number of aircraft associated with that. Now, one aspect of this is obviously its close correlation with oil price. And if we see that, and one thing we haven't put on here is currency, but when you start to look at this, there is quite some strong levels here where we see a delay from one peak to the next of around 6 to 8 months. So if we start to see oil peaking around 80, then we could start to see that after the Q1s, we might start to see a little bit more of an increase in some of those failure rates going forward. So another one here, any change in the investment grade of aircraft types on the ratings? When we've updated our ratings, yes, there has been a few changes mentioned in here. We've had the 777 has taking on certain age groups is taking a downward shift, and likewise we have seen a strengthening on percentage numbers for NEOs and Maxes compared to the CONGs, purely based on our oil forecast. In terms of another one here we got here is, so why the slower trading is another one on here. I mean, certainly the number of tradings that we have seen has been brought down by the number of lesser acquisitions, and certainly the very large one, you know, we see that, you know, there's been rumored obviously that GCAS will be sold. That will be a challenging task for anyone to take on, as we saw with when ILFC sold. It took several years. It's not necessary. It's not a motivated seller like ILFC was, and certainly there have been some big trades that have gone through. We're also seeing as well a propensity not just to buy the lessor, but also to invest in there as well. So we're also seeing that some investors are looking to invest into the lessor that exists rather than buying them out as well. So we're also seeing some shift away from that. But also a lot of people are holding on. We have seen that the aircraft that have been paid for the last couple of years are being held in there for a longer period of time. Some lessors want to grow; they don't want to start shifting out. So we're starting to see a shift down that. So sale leasebacks we saw dropping a little bit. The sales with leases attached, which is the lesser acquisition stuff, we've seen that slow down. Sale leasebacks we saw slow down a little bit, whilst the sold off lease increased. But if we see a market correction happening, we could see that increase further. We could see more sales off leases, as there are more ability of those who've got cash to take advantage of a good deal. Lesser acquisitions will just purely continue as they do, as that tends to be operating in a closed environment. And I would also say as well that ABS market, of course, could start to come down a little bit too. Okay, another one on here. So what is your expectation for passenger growth in 2019? So the beginning of the year, I believe it was around, the top level was up as high as 9%. That's been coming down sort of mid-6s. And certainly we could expect to get that down to the 5.5% for 2019. Growth is still growing. It's just that it's growing at a slower rate than it has seen before. Certainly the driver in the US market, if that continues, which we expect it to, then those numbers around 4% growth should continue. That may edge down a little bit, but usually we see US market around 3.5. So that's well above where we would normally see it. But the Chinese market, which has been in the double digits, is now around about 7 year on year from this time last year. And of course we'll expect to see that. We've seen that 2 or 3 years ago too. And we expect to see that big boost obviously in the new year, but that will be a big test, of course, when we start to see the movement of traffic in China for their New Year celebrations. And then when I look at other areas which are obviously driving the Asia Pacific market, Southeast Asia is going through some troubles, certainly economically, and we may start to see that breathing through. So overall, we do expect it to eke downwards, but certain areas, like a lot of areas of Europe, we've seen growth that's been exceeding prior demand. We have seen that same thing in the US market too. So some pretty big market centers there that are still powering this. South America has been dormant for a couple of years. We're expecting a bit of a boost up on that too. So another question here we've got here: have you heard of any airline operators switching to LEAP engines versus Pratt due to continued GTF issues? No, I haven't seen anything specifically. There's a large number, looking at the data, of unknowns. It's still about a third of all the prior orders are unknown, that don't have any particular affiliation either to, and there is a large number of unknown, undisclosed orders within the databases as well. Either that's through year-end padding, but it's not something that, yes, we're expecting for those who've made decisions to be swayed by that. Clearly there are advantages of either engine. You generally get that. There are variances in terms of fuel burn, and the GTF does have an advantage from that economic aspect of it. But then when you're looking at it in terms of reliability, that's really where the key is. So generally speaking, it's always been that play between reliability, maintenance cost, and fuel burn in there. So there's bound to be plenty of backwards and forwards on some of these, but of the actual known ones, I'm struggling to think of anything that has actually switched once they've made that decision. So another couple of questions here. Can narrow bodies go to rate 70? Certainly yes, but I don't think they necessarily should. I think the engine suppliers would have a fit if it managed to get up to that level, but never say never. I would say that there is more of the cards that, I mean, there's about 8 years of production life that's left in the current backlog, and you know, if we had a market correction within the next 18 months, that could, it's unlikely to really shake it too much, but airlines who are ultimately taking these aircraft may not want them, so we may start to get a few bill pushback, and that's really only where it comes from. The OEM gets paid when it gets those aircraft delivered, and so we expect to see that that, you know, some pushback from some of the airlines if they can't afford them. Certainly we could see some increase in cancellations. If we start to see big increases in cancellations, so this year was 183 across the two large manufacturers, which was echoed across just Embraer alone in the same year. If we start to see those rise into 300-400 per year, then clearly there would be a few more issues, and they may start to tailor that a little bit, primarily because you can't really go up and then come down again. And one thing that Airbus has managed to maintain is an upward trend only of production, whilst Boeing traditionally has been able to go up and down. But from a labor perspective, it's a total nightmare, and that's not even covering the supply chain issues as well. When you look at, say, CFM will, as they'll say, they'll build whatever they've been asked to build. So they will expand if they need to expand, I'm sure. For Pratt, it could be a little bit more difficult, and certainly being across so many different models could be more of a challenge for them. Although we have seen a bit of a pushback in terms of engine supply towards the regional jets, so their focus will be certainly on the 320s. So yes, I think it can get up there, but I think it would be not prudent and wise to do that, given. But that'll have to be something they decide near the time, looking at the cancellations. Okay, so how do you view the coming production rate increases in the light of lower lease rates for new MVs? Okay, that's okay. Shuffling back of loops. Do we need 115 new narrow-body aircraft a month at this point in the cycle? Yes, I mean, my personal view on this is that obviously anything that's oversupplying into this market, no, clearly we don't. It's certainly something that I think echoes many of the points of the lessors as well, is that they would like to see a steady stream of 42 a month, and that's around about it. And that would stabilize the pricing for the last offer line aircraft. We would effectively not see a last offer line effect if the production rates were much lower. I think that going into this sort of cautionary market where we are, whilst they can do it, and we have seen OEMs buck every trend that the rest of the market wants them to do, and that doesn't seem to ever deter their mind, I would say that no, the market ideally would prefer to have just a stabilized point, not much of uncertainty. If it's 60, it's 60, and just hold it at 60. If it's 50, it's 50, just hold it there, and not have too much variability. It's just making sure that they actually deliver on what they said they're going to deliver, and then those can be dealt with. But certainly in terms of airlines, are the ones that are that continually obviously drive the demand for this. It's difficult to know actually what they want, because realistically, when you're ordering today, you're not going to get it delivered for another 8 years. An airline can't really predict what's going to happen in 6 months, let alone what's going to happen in 6 years or a decade. So clearly they are doing it purely on what they believe market share might exist, but of course many of them are double counting. So I would say that, you know, the market there is expecting to see a number of cancellations. We've seen about 25-30% of cancellations this year, and no doubt would expect to see that again next year, this year, coming year as well. And I would say that no, the market, I mean, from the leasing perspective, a slightly lower but constant market rate of deliveries would be better.
Okay, I think we'll leave it there. There are a couple more questions that have come through, so my apologies if we haven't answered your question. We will drop you a line individually and respond to those. So that just leaves me to say thank you, Stu, and thank you everyone for attending today's session. If you do have any other questions, you're very welcome to drop us a line. Our email details are on the slides. We will be sending out a copy of the slide deck and the recording, hopefully this afternoon, what's left of today. For information, our next webinar is yet to be confirmed. We are looking at setting up a follow-up to the impairment webinar that we ran in December last year. So we'll come back to you with our program. And lastly, for those of you in Dublin next week, as I mentioned before, we are over there. Do come and find us and say hello, or drop us a line if you'd like a meeting. So on behalf of IBA, Stu and myself, thank you for joining us today, and goodbye.